Yo, hello traders. It's your one and only Forex coach, Team Legend, and I'm super excited having you all here today on this. If this is your first time on my channel, could you do me a little favor? Hit the subscribe button and turn on the notification bell so that you'll be the first to get notified whenever I release a new content. And don't forget to smash the like button if you love this video, because in that way you encourage me to do more. Today we'll be talking about how to mark out your zones when analyzing your market. Now, first of all, the question is, what is a zone? Okay, now a zone simply means a point of interest. A lot of people call it POI. All right, I believe you must have seen a lot of screenshots of people and you see them write POI. POI simply means point of interest. And what is the meaning of point of interest? Point of interest simply means the area where a trader intends to place an entry, the area where a trader intends to buy or sell. Now we've got to understand that the financial market is about buying and selling, and not just anyhow buying and selling, because this is one of the reasons why a lot of traders lose money in the financial markets, because they always want to buy anywhere and sell anywhere. So I'll give you a very simple illustration. If you bought an orange for $500 and your intention is that you want to make profits, what would you do? You would sell that orange a little bit higher so that you can make profits. So if you sold it a little bit higher and you sold it about $600, how much profit have you made? $100. And why did you make that profit? You made the profit because why? You sold the orange a bit higher than how much you bought it. Now after selling it for $600, and now you want to buy another orange, would you go ahead to buy orange of $700? No. If you go to the market and notice that orange is high in price, what you want to do is to wait for it to come low in price so that you can buy it low, in order for you to be able to sell it high again and make profits. And that's the same way it happens in the financial markets. You always want to buy when price is low, and then you sell when price is high so that you can make profits. But a whole lot of traders buy from low and they sell from low, or they buy from high and they want to sell from high, or they even buy from high and sell from low, which is wrong. You have to buy accurately. That is to say, you buy from low and you sell when it's high so that you can make profits. So in that same manner, when you're trying to mark out your zones, you're trying to mark out your point of interest, that is the area you want to buy from or sell from, that is going to make you profits. So today in this video, I will show you a little illustration of how to mark out the zone. Now for me, whenever I want to mark out my zone, I always use two different tools. Number one, I use my horizontal line and I use my rectangle. Okay, so with these two different tools, we're going to mark out our zones. Okay, so the first thing you want to do is you want to get into your chart, depending on the time frame you're looking out for. A lot of people analyze their market from the 4 hours, some 1 hour, and some even analyze 30 minutes. It all depends on you and what kind of a trader you are. We have traders who are scalpers, we have traders who are day traders, depending on what kind of a trader that you are. Don't worry, in subsequent videos we are also going to be talking about scalping and day trading. That is why you want to make sure you smash the subscribe button and turn the notification bell on so that you don't miss out any single video. All right, so now let's say I have here to be my resistance zone, and I will bring out a support somewhere here, I'll place it here, and then I'll just one more, and then I'll place it, let's say here. So now I have just drawn out a few support and resistance. Now how do I mark out my zone? Because you need to understand that support and resistance is different from zones. We have support and resistance zones, and we have what we call supply and demand zones. So you need to understand all this logic. So I've drawn out my support and resistance. Now the next thing I want to do is to mark out my zone. So how do I mark out my zone? If I put this rectangle here and drag it all the way from here to the future. Okay, what did I just do? I just marked out my rectangle starting from here. This is where it started from, and this is where my rectangle ended. What I just marked out was this last candlestick here that's pointed out with a shooting star candlestick pattern, and before the bears push down. So I just marked out that particular candle all the way from its opening to its closing. I marked it out and drew it out to the future. Why is that candle significant to me? It's significant to me because I have it to be one of the head guys on my resistance, and not just the head guys. I have it to be one of the candles that gives me a pattern. It's a pattern. It shows me that the bears are in the market from all the way here. Imagine if I was only a trader who trades according to candlestick patterns alone. That candlestick formation is enough to tell me that the bears have entered the market. So this zone is so specific. So that is why I dragged it from its opening to its close, and dragged it all the way to the future. Now, why did I drag it to the future? I dragged it to the future because I have this belief that anytime price comes back to it in the future, there's always going to be a reaction, which we can see clearly that there was a reaction in the future. Even when price came again, we see the reaction inside this zone. So all this blue area right now that I have this rectangle, all this blue area is what we call a zone, which is what we call point of interest. Comment POI and abbreviate it completely. Say point of interest on the comment section. I want to know those of you who are learning from this. Okay, so this automatically is a zone. And why is it my zone? Because any day I see price around it again, I must react, because I know the price will react. And what should be my reaction? Either I buy or I sell, depending on what I see. So we could see clearly what happened after all the move. After how many minutes or hours or days it took price to come back to it, another reaction took place, and we see the move. When it came again, another reaction, we see the move. When it came again, another reaction, we see the move. All right, so this simply means that anytime I want to place a sell, I will only place a sell whenever price is in this zone. In this zone. Now let's draw another zone for a support area. Now another zone I'll be drawing out is going to be here. All right, take note of what I'm using to draw out my zone. The last candlestick before the real move. All right, that was exactly what I mapped out here. The last candlestick before the move. So this was the last candlestick here before the move, though this is a support area. Yes, I know. That is why you should understand that your zones can be different from your support and resistance areas. This is why you need to learn it well. Smash the like button if you know you love this video, traders. Let this video go viral so that a lot of people can learn this. Okay, so now I've mapped it out and dragged it to the future, and we could see what happened when price played around and came back in the future. It came into that zone, tapped into that zone, and pushed back up. And that's exactly what's going to happen. If it comes back here again, it might tap into the zone and push back up. Okay, so with this already, I believe you know what it means to draw out a zone. I'll still talk about it in subsequent video. That is if you request for it. If you think you haven't still understood it clearly and you want more clarification, leave it on the comment section and I will talk about it in my next video. For the meantime, traders, stay safe and keep winning.